I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show, we have back with us Josh Rogers, founder and CEO of Minterest. Josh, welcome back to the show. It is a pleasure to see you again.
And thank you very much for having me. It's great to be back on the show, Ashton.
You're very welcome. I know a lot happened in 2022 since the last time that we spoke. I know your team has completely been, heads down in building mode as well, and I feel like the timing is working out perfect for the market moving forward and for this resurgence in DeFi. I'm excited to dive into Minterest's DeFi protocol. Let's just start from the top with people who are sort of familiar with DeFi, but they don't know the intricacies. Let's go with what is Minterest working on in DeFi, and then we'll dive into all the details.
Sure. So Minterest is a lending protocol, and there's lots of them. There's hundreds of lending protocols around now. And lending protocols are basically the foundational kind of debt market for crypto. It's how people lend and borrow tokenized assets. About 50%, half the TVL that exists on Ethereum is in lending protocols. So it's a big piece of the pie. And a large piece of that pie is dominated by a couple of big players. But really, there's been no real innovation in that space since inception, really since Compound came out in May 2020. We really haven't seen anything new. So Minterest is bringing something that is very much intended to disrupt the space and really introduce a whole range of new innovations that cause and create real value for people.
Yeah, there are definitely a lot of DeFi protocols, and as more blockchains get created, more DeFi protocols get created, but they're all pretty similar from what I understand. And I believe it was Aave and Compound, sort of the beginning, it sort of broke through, and since then, I don't think anything crazy innovative has happened.
No, and look, forking is cheap. And when you're in the middle of a boom, forking is a cheap, quick, and easy way to create something to take advantage of that environment. It just isn't necessarily sustainable. So we've seen 200 lending protocols in the space, but they all have ostensibly the same problem. And the problem they have is that they can't develop market cap. They can't actually build out and develop their capitalization because none of them are able to create underlying value in their token that is greater than the cost of the token in its dilution. So what that means is you look at Compound, you look at Aave, you look at all the kind of major sector peers, they're worth less today than they were 2 years ago. But 2 years ago, they're 3 times bigger today, they're more mature, their security is more sound, their user communities are much more established. In every single way you can possibly imagine, these protocols are more valuable, but they're not able to be. And the reason why is inherently to do with their token economies. And the problem is they don't have one. They have very low utility governance tokens that don't do much, right, other than enable people to vote. And that as a system is pretty broken. So what Minterest is about is changing the paradigm.
Yeah, no, definitely. I've seen a lot of discussions around, why does this project have a token, and if so, how does it actually create value or a sustainable ecosystem to add value into the ecosystem and grow it? So I'm curious on, how have you and your team approached this with Minterest to disrupt this and actually bring innovation into DeFi?
Yeah, look. Minterest token is a transfer mechanism of the value the protocol captures back to the people who participate in its governance. It's a real reward system. If you think about current protocols and lending protocols and their token systems, it's pretty much like you walk into a bank where the bank manager walks up and says, look, we've got this great token promotion. We're going to give you these tokens that allow you to vote and participate. And you say, well, do I get any of the money that I help you make through my great ideas? And they say, no, we keep it all. And you go, well, how come this thing is so important and valuable? Is it because I'm the only person getting it? They go, no, we give it to every single person who comes in the branch. And you go, what, this week? No, for the next 5 years. So, this is all pixie dust. There's no underlying value being built into these tokens. And that matters if protocols are going to reward their communities for creating value in a way that actually really means something. So, the governance token enables people to participate in governance, but it should also be a reward mechanism that transfers the protocol's value back to them for doing so. And that is a fundamental shift. And to do that, you've got to do something really hard. You've got to go and build an auto liquidation engine, which is what we did.
Yeah.
So there are no external liquidators in Minterest. Right? The protocol runs the entire process automatically, and in doing so, it captures all that fee income. And that fee income in the last couple of years has been measured in hundreds and hundreds of millions of dollars. Compounded Aave between them have generated $1 billion in fees, right, in the last few years. Now, what happens when you reward your governance community with that income via a buyback like Minterest? The answer is really good things. So that's actually what Minterest is the game of doing.
Amazing. Well, I'm looking forward to testing it out. And yeah, I've heard the story many times about the governance tokens, and that you can vote on things, and like most of the time there's a revenue or income system built into the protocol that's totally separate, that's just like benefiting a couple whales, and it doesn't actually help the token holders that are voting on things, but they're not really getting value back themselves. I feel like that paradigm shift needs to happen.
Yeah, and it's not creating sustainability, it's not creating a self-funding system. And if you want decentralized systems to really work effectively and powerfully, people have to be rewarded with real underlying value and not smoke and mirrors. So we're big believers in that, and that's exactly what Minterest is designed to do. And in doing so, what it does is that if you are one of those people who participate in its governance, if you're staking in the protocol, you are then the beneficiary of the highest APYs in the game. And the reason why is because total APYs are a function of the interest you receive plus the rewards you receive. And if you're a borrower, you now have the lowest borrowing cost in lending protocols, bar nobody. So that is normally a contrasting claim. The highest APYs with the lowest borrow cost, but that's actually what the model delivers. So we think that that's something that DeFi is well going to be looking forward to.
Amazing. And so from what I understand, the protocol is like fully collateralized, and then if there's people that get liquidated, there's a liquidation fee that goes into the treasury, and also just from the interest spread. Those are the two sort of revenue generations of the protocol that actually help build that tokenomics system to drive value for the entire protocol.
Yeah, that's most of it. We do flash loan fees as well. When you look at where income comes from protocols, they're the two key areas. Now, when you look at other lending protocols, that income is being extracted by external parties. It's being extracted by liquidators, it's being extracted by administrators and developers. It gets dressed up in all kinds of ways, but really what it's about is fee extraction. In Minterest, there is no fee extraction. 100% of the fees are captured by the protocol, and the protocol then applies that to its buyback, rewarding its users for them participating in governance, and not rewarding them with pixie dust, but rewarding them with true underlying value.
Amazing. And I was looking through the Twitter, and I saw that you're also incorporating NFT tokens into the system to add value in extra ways, which is interesting. Can you talk about that approach? Yes.
Well, look, there's a whole range of feature sets that come with Minterest. As you're aware, we're launching next week, but during that first initial phase, access is going to be restricted to our NFT holders. So Minterest NFTs give people boosts in their emissions. So they're ostensibly a vampire attack, Ashton. They're a very beautiful vampire attack. If you're a whale sitting on another platform and you have the opportunity to come to Minterest and boost your emissions, I imagine one of the things you'll consider doing is going out into the marketplace and buying one. So they're limited. There's only sort of 400 or 500. But more than just the boost in emissions, what they do is they act as a VIP access card to our private kind of launch phase. And the last piece of that is actually next Tuesday when the protocol launches. So for about 4 weeks as we go into a listing, people will have access to is emission rewards, but only if you own an NFT. So that's quite limited. We expect those rewards for people to be really, really valuable. That's the intention of it. It's a way of us thanking our supporter community. And like I say, that's actually part of what the NFTs are about. but they're very beautiful. They're original images. We had a portfolio of artists create them, and they're based on the top 100 most influential people in blockchain at the start of 2022. I think that list is very different today, but we've decided to keep the list as is. And we actually had a couple of people we thought we wouldn't admit their NFTs, but we have significant demand for Do Kwon and for SBF. So, so they'll get into it as well.
Very cool. And yeah, I'll put a link to that for the NFT marketplaces so people can check it out. And it's nice to not have 10,000 of them or a bunch of pictures of dogs or something like that. A unique collection as well. So I saw like a snapshot of it. It looks pretty cool.
Yeah, they have real utility, and that's what they're intended to do. Like they say that they boost emissions for holders. But the other thing as well is that Minterest comes with a big loyalty reward system. So again, when you look at governance and the value of governance, people who've been with the system longer are more valuable. Someone who understands how Minterest operates is going to create more value in governance than someone who has been around for 5 minutes. So we reward it. And so the longer that you've been staked with Minterest and the more that you stake, the greater the percentage of the buyback you earn. And that is a very substantial increase. It peaks out at 24%. It's a 24% increase in your proportion over 12 months. And again, that is deliberate. We want to reward people for being long-term users of the protocol, long-term contributors to governance.
Very cool.
And as said, that's funded from the buyback of the protocol. It's funded from its own activity, its own fee capture mechanisms.
Mm-hmm. And I know that your team was working through this and making sure that everything is obviously safe and secure, perfect, and for managing the launch time of it. And I know a lot of projects were looking at launching in 2022, and it's just the market conditions weren't good. And people, obviously DeFi continues to grow, but I don't think people were understanding the true value of like, why am I using this protocol over using this other protocol, and not understanding where the value is actually being accrued. And I feel like Minterest is doing it right. And it seems like the timing is also working out for the market and hopefully a resurgence of major DeFi lending protocols as well. What do you think about the market surrounding where Minterest is moving into in these DeFi lending protocols and like the market size in the near future?
Well, look, I'm incredibly bullish on blockchain and crypto generally, and the reason why is I have one competitive advantage in this game, and that is I'm older than everybody else. I started my career during the dot-com boom, and what I'm seeing right now is eerily like a complete facsimile of what happened in 2.0. We had hundreds, if not thousands, of projects where really no one knew what they were doing in terms of creating underlying value. You had investors who just threw money at it because it was all spray and pray. Again, they probably knew less about it than the actual, the founders themselves. I know all about this because I was one of those guys. And then what happened is it all blew up. And when it blew up, something incredibly important happened. And that was that two questions got asked. How do you create real underlying value? How do you do it faster and better than anybody else? And if you don't have answers to that, you're dead. Now, that's really good news. And the reason why is that it means that true value is now being built for people that can actually now grow and develop. So blockchain has something that's incredibly important. It has the foundational infrastructure built. It didn't have that in 2017. It does now. What you now have is you have extraordinary infrastructure in terms of layer ones, but also all the interconnects, all the pricing oracles, all the key pieces. The ecosystem is so significant that developers can now come in with confidence and build. But importantly, what's happened is that we've cleaned the nonsense out. And in cleaning that out now, what really matters is those two questions. How are you creating true underlying value? And how are you, over time, and how are you doing that better and faster than anybody else? And if you can't answer them, then you're dead and you deserve to be. And the other thing to notice is what also happened when that happened in 2000. And that is that money started to go into things that created new use cases. So I expect to see a flourishing of new use cases in crypto that we've not yet seen. And again, the reason why is because people are now chasing quality. Mm-hmm. So from my perspective, the timing is absolutely right, because I think we're on the cusp of something. And when you go back and look at the market cap graph of the NASDAQ top 100 and you match that against crypto, they're identical. During the dot-com boom and now. And then if you look at the NASDAQ graph between 2001 and today, that graph only goes one way. And the reason why is that after that boom, the freight train of value creation had left the station. And really we're seeing that freight train of value creation in blockchain now happening, and in a way where people actually are starting to truly understand it. And I see that as a very bright future indeed. For me, as a guy who's been through that cycle once, I get to be in a replay, and it's one of the most exciting pieces of being involved in DeFi.
Yeah, and you've lived it, and so we know that the market's in cycles, and that you really have to produce something of value at the right time as well when it's needed. And being too early is the same as being wrong. I've heard that often from VCs, but I feel like now is a good time that this protocol is actually coming in and switching it up with DeFi. And it's been a couple of years of stagnation, and there's a time that needs to happen where we move to the next level. So I'm excited to see.
And look, in technology cycles, there's a very significant second mover advantage. Mm-hmm. So there's totally first mover advantages, right? No problem. But second mover advantages occur where you have a system where you haven't seen great innovation, right? There's the ability for a new player to come in and do something new that creates extraordinary new value for people. Mm-hmm. And Minterest does that in a multiple number of ways. And in doing so, comes in and then is able to really take a sector leader position and be a true disruptor. So, for lending protocols, that's very much the case. We haven't seen anything new happen for a long time. Mm-hmm. We've seen this kind of relentless copycatting going on because that's been cheap and easy. It's a kind of an easy pathway for people to make money. But how you actually build true value is hard. You've got to invest time, money, and resources in doing something new, and that comes with a whole range of risks. Mm-hmm. But that's exactly the pathway we've chosen. We're delighted with the outcome.
Mm-hmm. Yeah, and it also comes with rewards. Now, as more people that have not been exposed to DeFi, there's a pretty small percentage of people that are in cryptocurrency that are actually using DeFi regularly, and I know that that's going to expand as more people move into crypto from traditional finance and people who weren't involved before. And one of the barriers to this mainstream adoption across dApps of all niche industries is the user experience or the user interface, and just making it really non-technical and making it friendly to use. And even though there's a lot of money on the line on the DeFi side, there's still a lot of people that they're not coders. And I've seen some of these DeFi protocols that are so complex and really not designed for people for easy adoption. But I was looking on the socials for Minterest, and I saw a snap of the user interface, and it looks like you're driving a Ferrari or something really cool. Can you talk about your team's approach to the user experience, lowering the barriers to entry, and just the usability of the actual protocol?
Well, the first thing is how do you support people? I mean, this is their money. We're talking about people's money here. How do you support people? How do you give them true confidence in their decision-making process? Not pretend to do it, but actually really do it. Mm-hmm. Now, that's always been the premise of everything that we do in product. We've built something really quite unique. We built out a dashboard that's inspired actually by the GT3 Porsche. So it's the dashboard design of the GT3 Porsche was the actual inspiration for the dashboard. But there's something quite incredible at the heart of it, and that is a prediction engine. So it's a probability prediction engine which is able to provide users with live data and live insight into the probability of their portfolio being subject to a liquidation risk. And it interconnects with Minterest messaging system so we can notify you in advance. So we're not in the business necessarily of trying to have people be liquidated. That's not our business model. Our business model is in supporting people. And you could say, well, Josh, why would you give up the liquidation fees to do that? And the answer is because we think that there's a far greater benefit, and we believe there is a far greater benefit in having more users bring in their supply and borrow activity. Mm-hmm. So we built something very beautiful. It's extremely, unique in terms of the space, but it's also engaging. So, when you're talking about usability, how do you have a financial product that not just tells you what you want to know, but in a way that you want to use it? Mm-hmm. And that's been an awesome challenge for us. Something that we've loved cracking, and it took quite some time to do. But there's been about a year's build in what we've done, quite a significant build in terms of that design and that product offering. So we're very proud of it. But again, it's not just about building something beautiful. It's about building something that fulfills purpose, creates real value for people. So our dashboard, the Minterest dashboard, will look much more like a sophisticated, financial suite or data suite for people that gives you true insight, rather than just some graphs that don't really mean much.
Yeah, no, I think that's important. It looks great, but what's the value and the information you can receive from it, and the interaction of it is even more important about the user interface. So I'm looking forward to seeing that full thing from what I saw in the snapshot. And now, Josh, we don't have a lot of time left, but let's talk about...
Just as a final action, I just wanted to say this is I think we're the only financial product I'm aware of where we're going to actually use our product as part of our marketing, right? Uh-huh. And so it's that good. And like I say, we think that people are going to love it. We really do. But it's going to be front and center as a part of Minterest brand and positioning. And you think about that, a DeFi protocol is using its dashboard as part of its actual marketing. That's something new. So it's going to be fun.
That's very cool. And now, Josh, we don't have a lot of time left, but I want to talk about the next steps for the launch and user interaction. You mentioned about the NFT launch and the early start on the protocol. Can you talk about that? And for the viewers that are watching and they're past that point, what are the next steps for everyone to get involved?
Right. So the protocol launches next Tuesday. It'll be next Tuesday or Wednesday. It'll be early next week. I say next Tuesday. I think, oh my gosh, if there's a 24-hour delay. But yes, it'll launch next week. But in doing so, it's really it's a restricted access for NFT holders. So the rewards in there will be substantial. There's only 400 NFTs or so that have actually ever been issued to anybody. About 100 of those are to significant Minterest supporters, and about 300 are to smaller supporters. So I imagine some of those supporters will sell their tokens, will sell their NFTs on OpenSea or Blur, which is where they're going to be listed. But and that gives people the opportunity to go and pick one up if they want to participate. That process will last for about 4 weeks, and as Minterest token heads towards a token listing. So we'll have a token listing, I imagine, at the end of March or April. That's obviously subject to DAO approval, but that's probably one of the first proposals that will go up. That process is underway. So we expect that the NFTs will allow people access to a very rewarding closed shop VIP process for about 4 weeks. And then after that, we open the entire protocol up to the public. And so then it becomes full public access.
Very exciting.
So it's exciting. It's been an interesting journey, as you've been part of the journey, Ashton. When we first spoke, I think about a year ago, so you've been right across what's actually happened since, and it's been a really interesting journey, but very worthwhile. In many ways, I'm really pleased about what happened on May 9th with the Do crash, because it enabled us to be able to deliver something that we wouldn't have been able to deliver inside of a boom environment. So I'm not happy that people lost money at all. I'm not happy about what actually occurred, to people's wealth. But from a Minterest perspective, it was really a big win. And so we've been able to use that time to now deliver something really quite unique, and something that we think is going to really shake up the space.
Mm-hmm. Amazing. I'm looking forward to it. And the timing seems to be working perfect. I can leave the links to just the Minterest platform, the socials to follow along for these updates, and the NFTs on the marketplace when it goes live. shortly after the video launches. I can put that all in the description box below to make it easy for the viewers. And all the best with this launch. I feel like the boxes are all ticked, and now it's just a matter of pushing on the accelerator to let it go.
Yeah, that's the game. So thanks once again, Ashton. Always a pleasure.
Yeah, appreciate it, Josh. Let's follow up in the near future.
Done. Look forward to that as well.